Hello there. I was recently awarded a grant, and I had a client today who was awarded a grant, and she asked me a question about recording it in your books. So that's what we're talking about today. There's been a lot of new grants that have been awarded, created because of this pandemic, and so I think the idea or the situation that you might find yourself in, you might find yourself in the situation of having a grant and you'll have to record it in your books. So how do you do that? Well, a grant needs to be recorded as either income or as a reduction of expenses. So what that means is that for the grants that are for specific expenses, so maybe you needed, like, actually you can think of the subsidy programs kind of like grants. They're not the same thing, but they have to be taken into income. So if you were to receive a grant for a new computer, say, that would be for a specific expense, and that one's a capital expense. So the amount that you capitalize has to be reduced by the grant. So even though that's capital expense, it still works the same way if it's for regular expenses. So maybe you got a grant to hire somebody, and so part of their wage was subsidized. You would reduce the wages expense line in your books by the amount of the grant that you received. So if it's for specific expenses, then the grant needs to reduce the expense line in your books. If it's for to increase your income, or it's to relates to an income deficiency or something like that, then you just need to take the income or take the grant into income. So I recommend recording it as a separate line item. Call it like grant revenue or something like that, like whatever you want. You could even put in the name of the grant if you wanted to have separate accounts for it. But it does need to be recorded as income, and it is taxable. So that's one of the downsides of getting a grant, is you do have to pay tax on it. But yeah, I mean, it's still free money, even if you have to pay tax on it. So worth it. And usually when you get a grant, you've got expenses to offset against it. So, you know, in the case of specific expenses, it doesn't, it's taxable in the sense that you've reduced your expenses, so you can't claim those expenses against your income for tax purposes. And when it's income, then usually it allows you to take on another project or pay for expenses that you would have paid for anyway. So yes, it's taxable, but it usually doesn't end up being a burden for tax purposes. If you have any questions about that, leave them in the comments for me. I would love to answer your questions, help you out a little bit if possible. And if you're looking for free accounting and tax tips sent to you every week, you can sign up for a newsletter. I've left a link to that in the description. I hope you're doing well, and I'll see you tomorrow.